Video that you got to watch, especially if you're selling. It's about maximizing your tax savings. We're going to try and do our best regarding 1031 exchanges and the New Jersey exit tax. So follow us along. I'll do my best. I'll kind of go over some terms, etc., and see if we can help with anything that you're currently going through. So, as a property owner, you may be familiar with the concept of a 1031 exchange. It's a transaction that allows investors to defer the payment of capital gains taxes on the sale of investment property. However, if you're a resident of New Jersey, you may also need to consider the state's exit tax when planning a 1031 exchange. So, let's start with some details. Exactly what is a 1031 exchange? 1031 exchange is also known as a like-kind exchange. Is a tax-deferred transaction that allows investors to sell their investment property and reinvest the proceeds in another property without paying capital gains taxes on the sale. The exchange allowed under Section 1031 of the Internal Revenue Code, which stipulates that the properties involved must be of like kind and held for investment or business purposes. Um, Basically, in a 1031 exchange, the property owner has 45 days from the sale of their property to identify a replacement property, and they have 180 days to close on the purchase of that property. By doing that, the owner can defer the payment of capital gains until they sell the replacement property. Sound confusing yet? It can be. So anyway, basically what you're doing is you're rolling over the gains of one asset into another asset without having to pay taxes on them. If you want to, I always kind of say this: defer to your accountant on exactly what's necessary, and make sure that you have an attorney that does 1031 exchanges, et cetera, to make sure that you don't get penalized by the IRS. So that leads us to the second part of this conversation. What is an exit tax? The exit tax in New Jersey is a tax that's levied by the state, our great state of New Jersey, on property owners who sell their primary residence or investment property and they leave the state. So you get penalized for leaving New Jersey. The tax is circulated based on the property's next gains, which is the difference between the sales price and the property's original price or cost, plus any improvements and depreciation deductions. The tax rate for the exit tax in New Jersey is about 2% of the net gains, but it can be as high as almost 11% or 10.75% for non-residents. The tax is typically withheld at the time of sale and credited against the seller's New Jersey income tax liability. If the tax exceeds the seller's net income tax liability, they may be eligible for a refund. Why am I talking about this? I feel like we just got done with tax day on April 15th, but I thought it was really important that people understood kind of these differences. So let's tie the two of them in together. How does the exit tax affect a 1031 exchange? If you're a resident of New Jersey planning a 1031 exchange, you're going to be subject to the state's exit tax if you sell your property and leave the state within 2 years. However, the exit tax does not apply if you reinvest the proceeds of the sale on another property within New Jersey, or if you move out of state after the 2-year period has expired. To avoid the exit tax in a 1031 exchange, it's important to work with a qualified, this goes back to seek professional, qualified intermediary who can help you identify replacement properties within New Jersey or in other states where you plan to move. If you do this piece, you can reinvest the proceeds of the sale and defer the payment of the capital gains tax without triggering the exit tax. 1031, exchanges or like-kind exchanges could be a powerful tool for just basically deferring capital gains. But if you're a resident of New Jersey, you also need to consider the state's exit tax when you're planning the exchange. Again, by working with professionals, it's going to help you. And just keep in mind, there's a 2-year period that needs to expire. This will help you overall Maximize your tax savings and minimize your tax liability. If you're looking for a professional that can help you, if you're an investor or you're just looking to sell a property and buy another property, make sure you consider all these things. We have tons of contacts that we partner with that are either accountants, attorneys, whatever you need regarding this sort of stuff. So feel free to give us a call. You can reach out to me directly. I'm Peter Cunha. I'm the broker owner of Open Doors Real Estate, and my telephone number is 917-690-5390. Thanks for watching. Please subscribe.